Imagine investing in a market that represents the backbone of the US economy. The S&P 500 is more than just a stock index. It's a mirror reflecting the financial health of America's biggest companies. But with economic uncertainty, inflation concerns, and market volatility, is the S&P 500 still a good investment? Stay with us as we dive deep into the trends, risks, and opportunities that define this legendary index in 2025. The S&P 500, or Standard & Poor's 500, is the benchmark index that tracks the performance of 500 of the largest publicly traded companies in the United States. Established in 1957, it has become a fundamental tool for investors to gauge market trends and economic health. But what does the future hold for this powerhouse index? In this video, we will explore the latest performance trends of the S&P 500, key factors influencing its growth in 2025, risks that could impact the market, whether now is the right time to invest. So, let's break it down. 2024 was a roller coaster ride for the S&P 500, with interest rate hikes, tech stock booms, and geopolitical tensions shaping the market. Investors saw both historic highs and unexpected dips. As of 2025, analysts predict a mixed outlook. Some sectors, like artificial intelligence, clean energy, and fintech, continue to drive growth, while others, such as traditional retail and real estate, face struggles. Understanding these trends can help investors make informed decisions. Several macroeconomic and corporate factors will determine the S&P 500's trajectory this year. Federal Reserve policies, interest rate decisions will directly impact stock valuations and investor confidence. Earnings reports. Companies in the index need to show solid earnings growth to sustain upward momentum. Geopolitical events, global conflicts, trade relations, and supply chain issues can trigger market fluctuations. Technological innovations, AI, blockchain, and automation will drive growth in certain sectors within the S&P 500. Consumer spending trends. With inflation stabilizing, consumer behavior will determine how industries perform. Potential risks. While the S&P 500 has historically provided strong returns, no investment is risk-free. Here are some key risks to watch. Recession fears. Economic slowdowns could lead to lower corporate profits and stock declines. Inflation and interest rates. Persistent inflation may prompt the Fed to maintain higher interest rates. Market corrections. A sudden downturn or external shocks could cause short-term volatility. Smart investors must stay diversified and keep a long-term perspective to navigate these risks. Given the current market landscape, is the S&P 500 still a solid investment? For long-term investors, the answer is often yes. The S&P 500 has historically recovered from downturns and delivered strong returns over time. However, for short-term traders, market conditions may require a more cautious approach.